Hi. Well, I'm Tyee, and this is my gardening accountant series. And my topic today is why LLC operating agreements are important. This question will usually start out with your lawyer. They're probably going to counsel that having a written agreement that's enforceable under state law is important to maintaining the fairness of equity between your owners. I've personally seen well-meaning owners of LLCs get stuck in frustrated attempts to reach consensus in what they believe was the original intent for the economics of their business, but later they can no longer agree on what those original intentions were. That being said, I'm doing this video to talk more about why that agreement is critical to your accountants and your tax advisors. If your LLC is being treated as a tax partnership, then the owners, the members of that LLC, are going to be taxed individually on what we call their distributive share of the LLC's income. Or in many startups, the owners are actually deducting their share of the LLC's losses. How the LLC allocates income or loss among the owners should be provided for in that operating agreement. While the arrangement can be really simple, like each owner receives an equal allocation, that's not a requirement. It's also not necessarily necessary for every owner to receive an equal allocation, even if every owner put the same capital investment into the LLC. The LLC form has a lot of flexibility, and it has flexibility in this regard in how income or loss will be allocated. Having said that, though, federal tax law does mandate that your operating agreement adheres to certain standards. The consequence of having an agreement that doesn't meet the standards in tax law is that the IRS can ignore the intended economics of your written agreement and instead recharacterize your LLC's income or loss allocations or distributions differently based on their own assessment, the IRS that is, of what the economics of that arrangement were. And that's not something you want. You don't want the IRS imposing their own judgment about what your intended economics must have been. You certainly don't want to be trucking along for many years thinking that you're allocating things in a certain way and then find out later that the IRS can and does impose their own opinion about how the economics should be divided, because that creates uncertainty in the tax liability that's being created for each owner in this business. So for this fundamental reason, I would always advise that you have an operating agreement that's drafted by a qualified attorney who works closely with your tax advisors, or otherwise that attorney has experience in partnership tax law. In future videos, I'll be talking about some of the more common points of agreement that you should be included in the LLC's operating agreement, those points being what should be there to be in compliance with federal tax law, federal tax regulations. Okay, well that's it for now. I'm going to get back to gardening. Thanks, and we'll talk later. If you enjoy these videos, please subscribe. Tell your friends and colleagues about it. The more people that can know about it, the better. And I hope to talk to you soon. Take care now.